talk some stocks. We do have some news in Tesla as the shares have been moving higher. They've been ripping here the last about 4 or 5 days, Renita. Kind of carrying the torch as some of the AI stuff fizzled out. Tesla's got its groove back.
It does, and it came through charging networks. So today, or actually last night, I saw this news come through as I was leaving the newsroom that Tesla is opening up its charging network to GM vehicles now, GM EVs, and that makes 12,000 Tesla superchargers available to GM EV drivers in North America. That'll begin in 2024, and beginning in 2025, GM EVs will be built to gain direct access to Tesla superchargers without an adapter.
For the past month, Tesla's stock price has been on a bullish trend, sitting at $260.54 as of recording. Investors and analysts alike can't help but get excited about how long this trend can possibly go. One particular analyst, Dan Ives, has shared his thoughts on Tesla's future and what it means for us investors. Welcome to Prima Invest.
2/3 of the world is covered by water and the rest is covered by you, Dan Ives. There's a lot of stocks in your universe that you cover, but Tesla's certainly right up there. What is it about the stock right now and the company that is giving you so much bullishness?
Yeah, I think what's happening, it's a sum of the parts. I'd almost call it an AWS moment, almost an Apple services moment for Tesla, because what's starting to happen now is that the 313 area code, after years of resisting, they recognize they need Tesla. And I think when you look at the supercharger perspective, from a revenue perspective, you go out 2025, GM Ford, they get 15% share. You're looking now an incremental of $3 billion, $4 billion a year of revenue that was not there. And I think what's starting to happen right now for Tesla, from batteries to supercharger to storage, the sum of the parts thesis is now starting, I believe, in the early stages to play out with investors. That's really what's starting to happen now with the stock, in my opinion.
General Motors and Ford made an exciting announcement, stating that beginning next year, individuals who own electric vehicles from these companies will have the ability to utilize Tesla supercharging stations. This news has caught the attention of Dan Ives, a security analyst at Wedbush. Ives believes that there is a significant development taking place, leading him to increase his price target for Tesla from $215 to $300. He suggests that these recent collaborations present a substantial opportunity for Tesla to generate revenue. Ives further predicts that Tesla is only in the early stages of capitalizing on selling access to its infrastructure and technologies, drawing a parallel to the significant success Amazon Web Services, AWS, has achieved in a similar endeavor. Amazon Web Services, or AWS, initially began as an internal cloud computing platform that Amazon created for its own needs. It was a risky venture at the time, but it eventually transformed into a massive success. Selling access to the infrastructure they had built proved to be a brilliant business decision for Amazon, surpassing expectations and significantly increasing the wealth of its CEO, Jeff Bezos. Presently, Tesla finds itself in a similar position. The company has developed its own infrastructure and technology for its electric vehicles, but is now extending the opportunity for traditional automakers to utilize this infrastructure as well. In an interview with CNBC, Dan Ives expressed his belief that the recent collaboration between Tesla and other automakers is just the beginning for the electric car manufacturer. He suggested that Tesla's initial focus on supercharging stations could potentially lead to advancements in battery technology. Ives metaphorically described Tesla as having built a castle and now eagerly awaiting other companies to join in. Ford CEO Jim Farley and GM CEO Mary Barra have answered that call by partnering with Tesla. Regarding the impact of supercharger access on the sales of GM and Ford electric vehicles, Ives pointed out that Tesla CEO Elon Musk has emphasized the importance of their success for the wider adoption of electric vehicles in the United States. Musk expressed his willingness to support other car companies, stating that Tesla aims to be as helpful as possible. He mentioned that Tesla is enabling these companies to utilize their supercharger network, and even offered to license their full self-driving or FSD technology or other Tesla technologies to them. Ives has expressed concerns about Tesla's declining margins, particularly following the price reductions. Earlier this year, the Wedbush Analyst reduced his price target for Tesla by $7 due to the company's diminishing earnings and margins. Despite maintaining a positive outlook on Tesla's overall trajectory, Ives acknowledged that the weakening operating margins were causing unease among investors. In a communication to clients, he highlighted that while Tesla demonstrated a mix of results with strong demand indicators, the main concern was the impact of lower margins, which would exert downward pressure on the stock. Ives emphasized the need for careful management of the margin compression and price reduction narrative in the upcoming quarters, as they could potentially overshadow the company's positive prospects. Wedbush has expressed confidence in Tesla's ability to achieve its delivery target of 1.8 million vehicles. They referred to a previous conference call where Tesla CEO Elon Musk discussed the company's annual goal. This comment from Musk was viewed as a positive amidst uncertain market conditions. Despite maintaining an optimistic outlook and rating the stock as outperform, the Wedbush Analyst adjusted their price target from $225 to $215. This adjustment accounts for the expectation of continued margin weakness in the near term, particularly over the next few quarters. Tesla's revenue and profit margins are poised to become highly appealing as a result of these recent collaborations. Ives predicts that the partnerships with Ford and GM in the charging space could potentially generate billions of dollars in revenue for Tesla in the coming years. He believes that this is just the beginning for Tesla in terms of capitalizing on service revenue. Ives describes Ford and GM as early pioneers or ambassadors for Tesla's strategy of granting access to its technology. According to him, whether it's batteries, superchargers, or storage solutions, the overall value proposition of Tesla's offerings is now starting to gain traction among investors. Dan Ives is not the only analyst who sees the positive potential in these partnerships. Piper Sandler, for example, projected in a research note that Tesla could accumulate over $3 billion in charging revenue from non-Tesla owners by 2030, and $5.4 billion by 2032. This additional revenue, combined with federal incentives, will aid Tesla in expanding its charging network. Likewise, Goldman Sachs analysts estimated last year that opening up Tesla's charging network to competitors could generate an extra annual revenue ranging from $1 to $3 billion. Wedbush also states that Tesla's agreement with GM, as well as a similar deal with Ford, has the potential to bring in an additional $3 billion in revenue within the upcoming year. While these collaborations may attract some customers who would have otherwise chosen Tesla to opt for a Ford or GM electric vehicle, the advantages for Tesla far outweigh any potential drawbacks. It's important to note that these partnerships not only present significant opportunities for Tesla, but also demonstrate a strategic move by GM to achieve their objective of expanding charging capabilities for their drivers by granting them access to Tesla's extensive network of 134,000 charging stations. This partnership is sure to change the EV market forever. Not only will it cement both companies on top of the EV industry, but this will also be beneficial for their customers as well. Thanks for watching. For more videos like this, click the link shown on screen. Remember to give us a like and subscribe to our channel. And as always, have a good one.